8/10/2013 time, 9:02 a.m. Pacific Standard Time. We have us before us is a weekly S&P 500 chart. We called for this correction. And we called for the correction right here. It's on the stockmarketfunding.com website. Back in May 21st, or slightly a few days prior to it, we said that we were going to go down to 1560. And we went right down to the penny. And that was long before the fact, before it ever got there. And then we said, hey, it's time to get in that long. And he came right back. So you had 1, 2, 3, 4, 5, 6 weeks to that May 22nd weekly pullback that lasted there to 1560 from 1687. It's all on stockmarketfunding.com. All the live analysis is well before the fact for our traders who trade index options, calls, and puts on the S&P. They've got to know that when they're buying those contracts that they're going to make a lot of money. But they have to know why. And I've already told everyone why. And I'm just going to reiterate it again today for the prop traders. Is the thing about this particular reversal is that we're going to break that half weekly bar mathematically. We're extremely overbought. Earnings season is out of the way. And let me tell you something. It's time to take the money off the table. And it's time to understand the directional intraday long tape and intraday short tape. Both tapes pay great money. What does a market maker do? He gets paid the short tape at times, and he gets paid, of course, the long tape. So on the weekly level, the S&P is in full bloom. It's just now starting the correction. The dog days of August are upon us. Let us beware. However, we will make the market with very low volume between the high and low intraday long ranges, that's to buy to go up, and the short ranges that reverse and go down. Now the S&P, the leadership in the 500 stocks, the top leadership stocks are going to be sold short on opening bell gaps moving forward. We did them all week, this whole week. The first 3 trading days, Monday, Tuesday, and Wednesday on the S&P, every stock hit their high and reversed. And the short transaction was made immediately. They were breaking below the previous half daily bars, 60-minute bars, 15-minute bars, 3-minute bars, and so forth. One of the things that we are going to show you is where would be the pullback going into September and the dog days. Remember, a lot of people are on vacation. So you're not going to have a high volume selling tape. You're going to have a low volume drift lower. You're going to come down and test this 10-week moving average at 1656. That means that people that got the 1710 puts on the S&P 500 and the 1700 puts on the S&P 500 for September are going to make some serious money just like they did there. But then when you bought the $1,560 call at support, that even paid more than what the actual reversal did. So if you got in at $20 a contract, we traded them, and they went to $82. So here, this particular reversal will be low volume reversal. It's going to come down. It's going to hit support at 1656 from 1710. That's a nice little spread. MMT. Here is the $1,700 puts and whatnot, and why they pay a lot of money. The bid and ask was $35, $45, $37. Okay? One of the things that we're going to point out very clearly is why does the S&P 500 puts pay again? It's because that is the direction that the market will go lower on lower volume. It'll fade on lower volume, the S&P index. They're short, very short term. That's the way the money's going to print. And we're not going to go against why when the calls will fall in value on the S&P 1700s up there at the top. And the $1,700 put, which we've already been building positions and doing short-term trades with, is here is the $1,700 put, MMT. Now, when we go over here, it's on a weekly level. These were $80 a contract. 1, 2, 3, That was 1 calendar month ago. This is what that put was worth. We are wholesale buyers down here at the bottom, which was $25 down here. They're already up $7. But you have to know the following. You have to know why, where, when, and what's going to be behind the move. We all know that. And one of the things that we want to be mindful of is the $1,700 put based on the S&P actually having a reversal again. No one said that it's the end of the world. What we are saying, though, is which way the directional price print is going to print favorably for the market maker. And why does a market maker know when to get them? These are wholesale. Okay? Retail was up here at $80. They were up here 100, 110. This is the reality of the prices on a weekly level. Here, let's show you on a daily. This was a daily price movement in the 1700 right here. And we already got it. And yes, this is tradable because this high over here on this day, which was 8.7, that high was 37.80 a contract on 8.7. This low here was $25 on 8.5. 3 days difference. So you went from 25 and you made a short-term trade up to 37.80. So that's a nice spread dollar-wise for a very short-term trade when the S&P is going to get exhausted and pull back on its multi-year calendar bull highs. But there's still money that prints here. So what we are saying is from a daily level, you can see where that $80 price is over here. You know, they were way up here at one time. Hell, they were damn near what? $200, $190 up in here. Those months. I'm only focused on right here with the MMTs because what we're looking at is where this high was. This next high that we're going to be looking at, which happened on 3.7 now. I'm sorry, 726. So on 726, they're $46 a contract. So from 32 to 46 would only happen when this would have to happen. The S&P 500 chart that's in this video, this particular reversal up here at the highs, which happened in these days, was exactly on 8.5. We had a high there of 1709. And that high there, 1709.67. So, look, it's a bull run. We called the reversal here or why the puts would work. It's on 522. Go look on the website. You'll see those. Just like we have a correction is underway here. Let's take a look at a 60-minute, though. That's very important in a calendar day. Why? Because you can see where that S&P has these 60-minute price reversals very clearly. And then you have rallies. But then you reverse and you come in and you put in the bottoms. But see, the thing about it is, if this was really going to be a bull, this particular breakout would have took out this last high and would have went back up to 1706. It did not do that. It failed that. It failed that. And then you can see here on calendar day of 8/9, today is 8/10. This is Friday. You can see for the last 60 bar, 60 times 2, 60 times 3, and you came right back here. It is higher, but we were going into the closing bell. So when you're going to purchase and make money on that S&P 500, you're going to have to know when to sell. And people just, here's a $1,700 put, and it's the regular. Now, what I am telling people is based on the actual intraday movement. So when the S&P is breaking up to resistance, the put side, the put option will drop in value, and that's how you buy it wholesale. And the only way you're ever going to know that, Only way you're ever going to know that is to make sure that you go through all the live trading videos over a period of time in different years. When the bear was strong and now the bull is strong, bear had been strong over 12 and a half years. I mean, there's a lot to exchanges and a lot to directional price movement. Okay, so let's be clear that you go to trading. One of the things you're going to want to do is click on the free trial. And you're going to want to hit get started today. That's what you're going to want to do so that you can be in here when these live trades are actually going down with the actual entries. You need to go to open an account page. Let us never forget that, because if you don't do that, you're going to miss everything. And what are you going to miss? Open an account here. You click on it. Viking Capital Contractor Agreement. What is that? We put up the trading capital behind our market makers that are in our monthly and yearly programs. It takes money to make money. So read through here very carefully. It takes money to make money. One of the great things about today for you is that you have that behind you as of right now. Okay? Because it takes money to make money. So there's the paperwork. So that's important, and I just want people to know that. One of the other things you're going to want to do is make sure that you get to that open an account. So you can get here, and you can read your independent contractor agreement right away. Once again, when we're trading the $1,700 puts, it's very, very, very important for you to know that when that high was reversing, the $1,700 puts were hitting the bottom price of $25. It's in the video. They were 80. We're buying wholesale. Yeah. Why? Because they stripped all the premium and we're at a major top right now. Now, just remember, things never stay the same. Anything could change anything. Let's be clear of that. And so this is for our MMT Market Maker division. For the people that aren't here today and other trading groups that we have, our other partners and colleagues and whatnot get to take a look at why we're calling what we're calling for a few days ago. And so far, we haven't been wrong. And yes, price volatility, you have to learn it, but that's at 1,700 put. And I'm going to let you know it again. That's a September regular. That's a calendar month. It's not a weekly. These other ones are W's. Those are weekly, and prices move totally different. But why am I going to make money on that $1,700 put? Why is it already paying? Listen, short-term adjustments will be made based on mathematical profitability and stop losses within the execution model. And one of the things that we would look at doing here is adding to positions, but we want to know where the next price level is. So the next price level is very clear over here. If we look at this $1,700 put as we are in a 60-minute chart, we can see right here where that $25 hook was. So here, that low MMT, they opened at 25. They held 25, and the high was only 26.50 that day. But look what happened. On this very calendar day of 8/5, that $1,700 put, again, MMT, went to the peaking price high of 37.80. And this date was on 8/7. So, short-term gain, you have 10 contracts, say you got in at $26, there's wholesale. You would be selling 75% of the contracts in there and then buying them back again. Or you would just come out at the top. The market makers always come out at the top, and then they just come back in and buy lower. And so once again, I'm going to let you know that there are higher price ranges, and we're going to be looking up here right around that $44 price level. That's what we're going to be doing. As far as, once again, let's keep the reality of the 1,700 regular put on the S&P 500. Now, let me be very clear. This is to all of our MMTs, whether you're the new beginner today or you're a long multi-year seasoned veteran. We have called for it again. and there has already been the gains and the entries and the exits already in phase one of the $1,700 put. One of the things that I would encourage you to do, and I wouldn't wait, one of the things that I think would be good for you to do is to read on the homepage. If you go to trading right here, what you want to do is learn what discounted option classes are. This is a market maker division. This is not your regular day trading stuff that you've taken many times over. No, So when you do get here in your free 5-day trial and you're able to participate and you're able to validate, you have to be able to validate it. That's why we do live markets during the day. That way people can't say we didn't know it. They get to see it right there in front of their face. Yeah, that is true. So learn about high profit trades. What are high profit trades? They pay a lot of money. And it's a lot better than getting up and going to some job or whatever. I mean, heck, you can make these trades right here. These are all trades for you new people. Go watch them. Here's an option one right here. How about that? Over 490% profit on Priceline. That was a while ago. It was still live and it was still done. And once again, what I can say is, why is the contract going to go higher? We already know why. We already know why. The first weekly reversal. Each market had, let's be clear, that there are higher prices based on the S&P coming down to make, when the S&P makes lower lows, then these contracts are going to go up. And I just want you to be very coherent that, listen, it's before the fact, not after the fact. And the only reason why we're letting our new MMT enrollment, people that are trading the capital that we provide them with a live intraday environment, all of these prices do have to be bought, but then they have to be sold. And a lot of people have a hard time doing that. Market makers in the school, they don't have a hard time doing that. When they're prompted and commanded by the lead market maker, the execution takes place. If it doesn't, then we will have it executed and take the profits and then talk about it later. That's how it's done here, so you know. So once again, this is for the new MMTs, and it's all going to be based on, once again, it's all going to be based on how the S&P 500 bull run short term, how they are going to come down. But why would this weekly reversal bar here at a major top, just like we called this one now, May 22nd is when it started, but we called it before it. 6 down, 6 up with a higher high. Look at the total weeks. Summer rally is over for calendar 2013. We have already hit our price target. It was really 1710. That was a target that we had come up with after the correction had taken place. And that time series and mathematical series play their roles in both directional movements within the broader markets and how an index S&P 500 trades. There's lots of other trades that go with it, MMTs. You can buy the bear at the bottom. That's related to the S&P. There are some other trades you can do with ETFs. So you can make money 3 times in one directional correction, whether it's a breakdown or breakout. Weekly reversals in play. The $1,700 put is tradable for profits and various entries and exits based on supply and demand and the actual market between all of the exchanges around the company, around the country. And what do I mean by that? Well, it's very simple. Volume is going to be a major factor because everything is going to be on low volume. I'm going to conclude, because of the low volume tape in the S&P, that the actual $1,700 put that we've been talking about again is going to do the following. That's this line code right here. There's your bid and ask, 32.90 by 34. Okay, that's the bid, that's the ask. Okay, and that's the top of the weekly reversal. Now, how can this reversal turn into, let's say, another week to support down here to the 10 week? What would be the value of the $1,700 put? I already know. They will mark them up and we will sell out of them on the high. I'm done. With the update of the actual S&P 500 daily, 60-minute. Not only that, because you have to get the wholesale entry on the prices on both sides, whether it's a call or a put. It doesn't matter which one it is. But you have to understand the directional intraday price movement in order to accomplish that entry, or you will never do it. A market maker level bid and ask ranges, you can get hit, and we will provide the live orders now. Okay?